The Securities and Commodities Authority has agreed to approve controls for offering and listing the shares of newly incorporated public joint stock companies to boost investor confidence while promoting investor protection. The regulator said in a statement that investments in such companies must be restricted to eligible investors such as banks, financial institutions, mutual funds, and other companies and institutions, in addition to the federal government and governments or affiliated companies and solvent individual investors with a minimum subscription of 5 million dirhams. Additionally, it was decided that founders of these companies cannot be special purpose vehicles, and the shares owned by the major shareholders must not be lower than the maximum permissible limit. Defining the companies further, the regulator stated that the main purpose of the company must be to carry out commercial, industrial, agricultural, real estate or tourism activities, and it must appoint a bank as an underwriter. Emirates NBD expects loan growth of 5 to 7% this year as the Dubai economy continues to expand despite the oil price drop. Loans at the bank, which is Dubai's biggest by assets, grew 3% to 246 billion dirhams last year from 2013, and net profit increased 58% to 5 billion dirhams. Shane Nelson, the bank's chief executive, was quoted as saying that the driver for profitability this year is going to be around what the bank charges off bad debts. Emirates NBD's optimism is in contrast to analysts' forecasts for the UAE banking sector as a whole. For the 5 UAE banks rated by Standard & Poor's, a group that does not include Emirates NBD, the agency predicts profit growth of 5 to 6% this year versus 21.3% last year, with cheaper oil as a prime reason. Emirates NBD's impaired loan ratio dropped last year to 7.8% from 13.9% in 2013 after reclassifying Dubai World debt exposure as performing. The central bank's numbers also showed that lending growth in the UAE slowed at year's end to 9.5% year-on-year in December from 10.2% in November. Dubai-based telco DO has announced in a statement to Dubai Bourse that its 2014 net profit stood at 2.11 billion dirhams after royalty, an increase of 6% from the 1.99 billion dirhams in the previous year. Its net profit before royalty grew 22.8% year-on-year to 3.7 billion dirhams versus 3.01 billion dirhams in 2013, while revenues grew to 12.2 billion dirhams last year, a 13.3% increase from the previous year. On further examination of the figures, it was shown that DO's mobile data revenues increased 18% year-on-year to 2.79 billion dirhams, with data representing 29.7% of mobile service revenues. Fixed line revenue also grew up 31.3% over the course of 2013. DO's net profit in the fourth quarter of 2014, after paying a royalty fee to the government, decreased to 512.7 million dirhams, a drop of 10%, although its net profit before royalty was 915.6 million dirhams, a 27.8% increase compared to the previous year. Commenting on the results, DO's CEO Osman Sultan stated that data continued to drive the momentum in the business as customers' demand for connectivity remains strong. DO has proposed a dividend of 20 fils, bringing the total annual dividend payment to 32 fils. In order to attract and connect more Arabic-speaking professionals around the world, LinkedIn has announced the launch of its Arabic website. The announcement was made at the online networking website's regional headquarters in Dubai. LinkedIn now offers a total of 24 languages for its users. According to the company's statistics, they currently have around 14 million registered members from the MENA region, and they are expecting the numbers to rise following the launch of Arabic content. It is believed that 300 million people around the world speak Arabic. Commenting on the opportunities that can arise, officials from LinkedIn added that the Arabic platform should help the youth in planning their careers, whilst also assisting them in identifying key demand areas and build on their qualifications. MENA region was regarded as one of the fastest growing markets around the world, and they're hoping that the launch will help companies based in the region to find the best talent, whilst also connect and engage with their customers.
We are tremendously excited to announce that LinkedIn has launched an Arabic version of the site. We've seen tremendous growth in this region over the last 2 years, growing our member base from 5 to 14 million. But our goal has always been to provide a localised service for our members, so that our members can get the true value from the platform to manage their online identity, to gain knowledge and to connect with their colleagues and contacts. So today we launch an Arabic version of the site, which we expect to see accelerated growth in the region, and something we're tremendously excited about.